Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, this has been a very interesting week with Greece on the brink of a collapse and China losing $3 trillion of value in their stock market in 3 weeks. You can't get crazier than that unless we start to follow that trend. And that's why I put out these reports each and every week, is to make sure our viewers are watching very closely what's happening with price action. But most importantly, once you understand how to read the price charts, it's going to help you protect yourself from suffering a catastrophic loss should the U.S. go through a series of downturns like we saw in China and elsewhere. I would not just feel so immune here at this point in time, because the domino effect is eventually going to affect the U.S. markets in many ways. When the Chinese market and the Asian markets took that big hit, there are a lot of international investors looking for a safe place to put their money. And we talk about commodities, we talk about gold and silver and such, but we could actually see a short-term bounce before we go lower, because the Asian markets are just in such disarray. People want to be able to move their money and keep it safe for at least for a short while, or a hedge, and that's what we're looking at here. So I kept my lines on the charts from last week, and this is the diamonds, the Dow Jones Industrial Average ETF. And as I zoom in, you can see that I did forecast the bounce here and a possible fill of the gap here and a pullback. So I'm going to leave this line in place because we are starting to follow that forecast that I put out last weekend. I am expecting this gap right here to fill, and then once that gap fills, there's an 80% chance that we'll go lower from there. So keep an eye on that. I still would not be taking any extreme long positions because of what we're seeing on the charts as being pretty bearish. We're just looking for a little recovery of that gap and then another wave of selling coming into the U.S. markets, particularly the Dow. Now, if you look at the S&P, this is the SPY, the spiders. You'll see that my lines are still intact again. I expect a little bit of a bounce and a move to this former trend line, which is now going to act as resistance. So I could actually move this out and extend that a little bit to give us a little bit more time there. And I'm going to leave that in place as well, because I think that the markets could come up to fill that gap as well. And then we can see this roll reversal here turn into resistance. So I'll leave the spiders in place the way they are, and then we go on to the Russell 2000. The Russell 2000 did exactly what I said it would. This is my line from last week. We did move lower, and now I'm going to add to that, where I'm going to add an upturn and then a possible pullback from this former trend line, which now, once broken, could act as resistance. And we have to be very, very mindful of this roll reversal here going on. It's something that I teach all the time. In fact, if you are looking to learn more about the roll reversal, you can go to the Market Guys website, click on this video tab right there, and that will bring you to our video library. And if you scroll down a bit, you'll see that I have a video that talks about the roll reversal right here. And it's a very short video, but it's going to give you an idea of what I do each and every week when I draw these lines on these charts. It's not rocket science, folks. It's fairly simple. You just have to learn how prices are moving and how support and resistance play a key role in future price action, and that allows us to actually forecast the market. So I'm going to leave that in place, with this line being the roll reversal resistance. It was support as a trend line. It's broken now. I'm going to look at that as resistance. So I'll leave that in place. Now looking at the Qs, that's QQQ, the power shares. This is the Nasdaq market. And you'll see, again, I left my lines from last week. I thought we'd see a little bit of a bounce. We are seeing a little bit of a bounce. I'm going to look for this gap to fill as well, and then a reversal from that gap. So every one of the forecasts that I put out last week is still intact. It's still looking good. The percentage of accuracy is high, and the Qs, again, representing the tech sector in the Nasdaq, is following along with the other indices. So I don't see any changes there. Now finally, the VIX. This is very interesting because with all that's going on in China, we have had an increase in our own volatility here. Interestingly enough, this gap filled. I don't know if you could see that. This is a gap from back here. This is a very minor gap that was left open. It almost filled, but didn't quite fill. And on this day, the gap filled. 80% of the time gaps fill, and then again 80% of the time after they fill, the price reverses. Now with the VIX, this gap filled right at that line, and then what happened after it filled? The VIX dropped. And that's why I still think that this gap is going to eventually fill. So I'm looking for the VIX to come down a little bit. I can actually adjust this a little bit. I'll remove this drawing and I'll just move it out to the side. I expect the same thing to happen here, and that is nothing more than that gap filling. So I'll get rid of these lines, and I'm going to redraw this to here, which is the gap fill point, and then 80% of the time it reverses, so I'm looking at that. So I just cleaned up the VIX chart a little bit, and we'll look at that next week. Again, if you go to the Market Guys website, just watch the videos, follow along. You can go to the Market Guys Facebook page. I also post a lot of information. I've been tracking the Asian markets and posting that on Facebook. I've been putting out any other news that's relative to what I talk about in my weekly market reports and in the trade alerts. So it's free. Just plug in and learn. Education is a risk-free investment. You might as well invest your time in it because it could save you a lot of money, and more importantly, it could make you a lot of money. So this is AJ Monty with the Market Guys. Have a great trading week ahead, and we'll talk to you soon. So long.